It's less than an hour until the opening bell on Wall Street. Joining us now, Barbara Reinhard, Senior Portfolio Manager and Head of Asset Allocation at Voya Investment Management. I think you want to stay long, but there's a lot to worry about. Is that kind of sum things up?
I think that's an accurate, but
the way I said it too. Right? Yeah.
But I would say there's a couple things that we're looking at in the data that give us some confidence on our desire and positioning to be long. So first of all, there's a number of central bank meetings that are coming up this week, very specifically from the ECB. They're likely to cut rates. In October, we think they're likely to restart their quantitative easing program. Going into quantitative easing programs, bond yields tend to fall as there's some concern that it won't be effective. The central banks are pushing on a string. And then, of course, what happens are bond yields start to rise and equities start to go with it. So we did have some oversold sentiment conditions in late August, early September, which certainly meant that the market, at least on a short-term basis in August, did get somewhat washed out, which is very positive, at least on a short-term view. And we do think that equities will be higher going into the end of the year.
We've had other people say that, Larry, in that the pushing on a string argument is very compelling. And a lot of people say that it's not going to work in Europe. It's not going to work here. But what they felt, it doesn't work immediately, but history shows eventually there is a positive effect from that. Has that been your experience, Larry, or do you finally, it finally just doesn't work?
Well, I don't know, but I am apprehensive about it, and I always have been. I mean, you can look at parallels in the past where it's worked, but there's also cases it hasn't worked. Mm-hmm. So I've never taken it too seriously, but it's an interesting point to make.
I think the cases where it hasn't worked was when there was no confidence in the central banks or the central banks were politically motivated. And I don't think we can say that about the ECB.
You don't have the same sanguine feeling about the bond market, I don't think.
The bond market has become very overextended, and it got very emotional through the course of the summer. And we do think it's overextended itself to the downside. We do think that the employment picture for the U.S. is slowing, but is in no way, shape, or form to the dire stance that the bond market has indeed priced in at this time.
So the September, or the rally we started to see from trade concerns 2-3 weeks ago, we're back to less than 2% from the highs.
Yep.
In September, we go to new highs?
We think so. One thing that we're looking very carefully for is the path of the U.S. dollar. The U.S. dollar is the road to better corporate earnings in the U.S. So we see that if you can get a 10% decline in the dollar over a one-year basis, it acts like a very big elixir and a nice boost to corporate earnings, especially for those large cap companies.
Okay, great. Barbara Reinhard, thank you. We'll leave it there.
Thank you.